U.S. employers ramped up hiring in June after a sluggish spring, adding 287,000 jobs. That's the strongest month of hiring since last October, but June's number comes right after May, which had its number revised down to a meager 11,000 new jobs, the weakest month of hiring in the U.S. since 2010. Joining us with more analysis is WSJ Heard on the Street Deputy Editor Spencer Jakab. How are you?
Good.
So what do you make of the discrepancy between June and May's numbers?
Well, okay, you have to smooth these things out, and there are a few reasons, and especially now, that you have to do that. One is you had a Verizon strike that took 35,000 people out of the number that month and put them back in this month, okay? So that's a fairly large effect. But also the standard error in this series is about 49,000, so it's going to be very volatile. I mean, you're measuring, there are 139 million people working in the U.S. You're measuring the change each month. Mm-hmm. If you're off by a little bit, you're going to have very, very wild swings in terms of the non-farm payrolls number. You shouldn't expect it to be dead on in terms of what economists are forecasting in any given month. So it's pretty normal. What is interesting is, what if we had this number last month instead of this month, before the Fed meeting? That's the interesting question to ask. Okay, so what if we did? What would you see the outcome? Well, we saw from the Fed minutes they were pretty worried about Brexit, and it happened. So that that came to fruition. But it's possible, or the odds would have been much higher, that they would have pulled the trigger and raised rates, as they had been hinting for a while. If you had a really robust number like 287,000, maybe they would have waited anyway, but it certainly would have raised the odds a lot. Okay, so we missed that. What does it mean then that the unemployment rate rose from to 4.9% to 4.7%? Yeah. Okay. So the unemployment rate, if you ask somebody on the street, what's the employment situation, that's the number they're most likely to know. It's like if you ask someone, what's a player's batting average, or what's their OPS, they're going to know the batting average. Their OPS, they might not know that. They might not know either. But the unemployment rate is the headline number, and that did tick up. But that's a separate survey. It's a household survey, and there's a complicated divisor in there. It depends how many people are actually in the labor force. And there's some good news there, too. The labor force got larger. The number of people who were actively in the labor force got larger, which is why it ticked higher. Okay, so it's pretty benign. There's nothing, no one's worried about the 2.2 percentage point tick higher the unemployment rate. They expected it to rise a little bit anyway. Okay, and so that number, just to clarify, was 4.9% for this month, up from 4.7%. Right, but it's still pretty good. Yeah, and let's talk a little bit more, I know you mentioned this earlier, about the Verizon strike and the impact that had on the numbers. So, I mean, it's 35,000 people who, when you're on strike, and this is the establishment survey, so they call all these big companies and they say, okay, how many people are working? What was the change month to month? Those people were not technically on the payroll, and technically now they're in June, in the middle of June when the survey was taken, they were on the payroll. And so in the context of this number, that's pretty big. It's a pretty big swing, 35,000 each way. Yeah. And so that explains some of the swing, not all of it, but like I said, this number is going to swing around a lot month to month. What you have to look at is smoothing it out over many months. And that trend has weakened a bit from the torrid pace of the last couple of years, but it's pretty normal for this stage of an economic recovery. It's not, not flashing recession. Okay, so how do you characterize the jobs picture now? So I think the jobs picture right now is what you would really expect in the latter stages of an economic recovery. And there's a really smart ahead of the tape that's in the paper today, written by my colleague Steve Rusolillo, where he basically took each expansion, going back many decades, and divided them into 4 parts. Looked at the first, second, third, and fourth part of it. The first part has the weakest growth. You actually have some, the labor market takes a while to catch up. The 2 middle parts are really strong. And the last quarter tends to be slower because, the economy's already kind of, it's not rocketing ahead, it's not catching up with the loss it had before. And that's where we are right now, I'd say, which is nothing to really worry about. It's fairly normal that we've slowed down a bit. We're still at a pace where we can maintain the unemployment rate. And I think, economists are fairly happy with what they see. All right, Spencer Jakab, thank you. Always good stuff. Appreciate it. Thank you.